Hey all, it's John from StopSaving.com here with some analysis of Bitcoin mining stocks and what it might mean for the price of Bitcoin. Bitcoin mining stocks could be on the verge of a major breakout. The Valkyrie Bitcoin Miners ETF, that's ticker WGMI, has been building a massive ascending triangle pattern for almost a year now, and that's getting close to a resolution. WGMI, which stands for We're All Gonna Make It, invests in about 30 companies that earn revenue from the Bitcoin mining industry. The exchange-traded fund holds Bitcoin mining stocks like Argo Blockchain, CleanSpark, and TeraWulf that trade on major stock markets. It also invests in other companies that profit from Bitcoin mining less directly, like data center providers and mining hardware makers. WGMI began trading in February of 2022 when it reached its highest ever price of $30.51. It then traded south quickly after that though, along with Bitcoin and the rest of the crypto markets, bottoming at $4.07 that December. Of course, WGMI investors have seen better days since then. The ETF is now trading near $18 a share, and it's tested the $18 to $22 region multiple times since July last year, while making higher lows in the process. That's created a giant ascending triangle pattern, and the candlestick chart you see on your screen here shows how the price of WGMI changes week to week. This way, it cuts out the short-term noise and focuses on the longer-term trade setup. Trading textbooks class ascending triangles as bullish patterns. They have a higher probability, not guarantee, of breaking to the upside than the downside. And that makes sense when you think about what the pattern says about buyer and seller behavior. The highs are about the same. Sellers keep defending the $18 to $22 resistance ceiling by selling WGMI shares within the yellow rectangle. But each time they defend that ceiling, they push the price down with less strength. Hence, the lows keep getting higher. So the more times buyers try to bash through that ceiling, the more likely they are to break it and force the price above it. But what about the fundamentals of Bitcoin mining stocks? Well, the fourth Bitcoin halving happened in April. It halved the Bitcoin reward miners get for processing a transaction block. Put another way, miners now spend roughly double on electricity to harvest the same number of Bitcoins. So all else being equal, that makes Bitcoin mining less profitable. But not all Bitcoin mining stocks are created equal. The financially weaker miners have switched off their machines and left the scene. That's opened the door for stronger miners to get even stronger. Remember, the mining stocks of WGMI trade publicly, so they generally have above average financial clout compared to smaller, unlisted Bitcoin mining companies. And here's another chart to pay attention to. The Bitcoin production cost indicator by Caprioli Investments shows that miners banked the most profits several months after each Bitcoin halving in the past. They had their best times about 9 months after the 2016 halving in yellow and 6 months after the 2020 halving in blue. Those lasted about a year and a half in each case. The green line is what miners sell their coins for. The purple line is the total cost to mine one Bitcoin, so that's electricity plus operations, and the red line is the electricity cost on its own. So the higher the green line goes above the purple line, the more profit miners book per Bitcoin on average. So what does this all mean for the Bitcoin price? Past Bitcoin halvings have led to higher Bitcoin prices. Halvings make new Bitcoins harder to mine after all, making the digital commodity scarcer, all else being equal. According to this Bitcoin production cost indicator, the total cost to mine a Bitcoin today is around $100,000. So if WGMI does break higher from here, it would imply that the market thinks Bitcoin's price should be much higher too. And incidentally, Bitcoin's 0.618 golden Fibonacci extension target for this bull run is just above $100,000 a coin. You can learn more about that in this article over here, which I wrote back in March, and I'll leave a link to that in the description. As usual, none of this is investment advice. If you like these quick updates, let the YouTube algorithm know that you did by liking and commenting below. And remember to subscribe to the channel and click the notification bell to get these videos as soon as I publish them. You can also read the detailed written version of this video on our website, stopsaving.com. I'll leave a link to that in the description too, along with a link to our free newsletter for how-to guides and investment ideas across crypto, stocks, metals, and more. So thanks for watching and take care.